Hello everybody, Jackson here from the Wolf Squad. Today talking about how to find oversold stocks. So to do this, I'm using finviz.com. You can see right up here, finviz.com is the screening website I use. You can see they have a whole bunch of different criteria here that you could use to screen out different stocks based on your liking. So today I'm going to show how to find the oversold stocks and oversold stocks are basically just stocks that have been sold a lot, right? Their share price is down very much, and it doesn't seem like they could go any more down, right? So if you're buying an oversold stock, you basically want it to jump up just because it's oversold too much. When something is oversold too much, um, it jumps. So you can see right here using the RSI. Overbought. So the RSI, we've talked about it in a brief video before, but RSI goes from 100 to 0. Over 70 is overbought. Under 30 is oversold. And anywhere in between is kind of the neutral zone, depending on where it's at, right? So oversold, we're going to go to 30 here, and then we're going to put the country in the USA. And for simplicity's sake, we're going to do market cap over 10 billion, over 2 billion. That way it just screens out some of the penny stocks that we don't want to deal with. So we see 24 stocks here that are oversold, over $2 billion in market cap in the US. Of course, AT&T here, we could actually look at performance, or no, charts. We could go and look at the actual charts. AT&T here, we see T-Mobile, Bristol Myers Squibb, Crown Castle Realty, some other stocks, Align Technology, Monster, Biogen, Cooper Companies, Chegg, Domino's. So from this chart, you could really see what stocks are basically in price discovery mode. What that means is there's little support. For example, AT&T would be this type of stock. Little support because past year hasn't even touched the price it's at now. T-Mobile, you can see it's a foundation. It's at a foundation right now, 117, 116. It'd be a good bounce. Bristol Myers Squibb, maybe in price discovery mode, we'd have to look at the 5-year chart or all-time chart to look more into it. But basically, what you want to look at is stuff like Chegg or AT&T, T-Mobile, Bristol Myers Squibb, stuff that hasn't that the price hasn't touched in the last year. So we could cancel all these out because the bounce won't be as big as if it would be something like Chegg or AT&T, T-Mobile. So T-Mobile looks pretty good here. It went all the way to 150 this year. Now it's at 117. So it's not a huge mover in terms of volatility or in terms of beta, right? You can see the beta 0.58. A 1 beta, it moves like the S&P 500, and a 0 means it moves like very slow, right? So Verizon, for example, very slow moving company. Beta is very slow, very small. Something like a tech stock like Shopify or a random tech stock that you're thinking of, the beta would be over 1 just because it moves very much correlated to the S&P 500. So we can see T-Mobile at that 117, 118 range. We could check the weekly chart here where each candle is a week. And we could see this support that it's on has been back tested since, so this would be 2020, November and October. You can see right here, same level as we're at right now, and same as March of this year, and now where we are. So T-Mobile could definitely be a pick. Let's see what else is out there. Bristol Myers Squibb, check out the weekly chart where each candle is a week. So there is some support here from the COVID recovery back in 2020. You can see right here in June, July, and the actual March crash, it did fall to 46. It's another low beta stock where the high is 68, it's at 56, but it's down so much, right? 0.61. So honestly, we could also put the beta to be pretty high. If we want the stock to be moving, beta, let's do over 0.5. Let's see if we get over 1, if we get any bites. All right, so we have 6 stocks we could look at. This is just based on your preference, right? T-Mobile, AT&T, and Bristol Myers Squibb, they have low beta, low volatility, but that doesn't mean that the stock could go up 5, 6, 7, 8% in one day, right? If the stock jumps from being too oversold. So just if you want, more risk, then feel free to look at higher volatility stocks. This one looks pretty enticing just because it's fallen so much from 36 to 17 in a year, down half, right? Cut in half. Almost at the same level it was at the very COVID low. So something is definitely wrong with this company. Stocks don't get cut in half for no reason. So maybe we should leave this one alone if it's a fundamental reason, because this doesn't happen just by random, right? So let's go back, see what else is out there. Something that is not too unknown. Let's just check out a line here. So the problem with stocks that aren't too unknown is they're probably going to be up a large amount. You can see right here, although a line is at $600 right now, you can see it's a large support. At the COVID low is 120, 130. So it's gone up 4 or 5 times since then. And now it's at a $100 dip. So if you think it could keep going up based on technicals, based on how oversold it is, then you can keep going and buy in. So that's just a quick video talking about finding oversold stocks based on your risk preference, right? No matter your risk preference, you should have the country USA, RSI oversold under 30, and a market cap of over 2 billion. Now, based on if your risk preference is little, just do right over, or you could just do any at that point, and you'll find these big, giant, slow-moving stocks. If you have a high risk tolerance, then go over 1, and you're going to find the quick movers, the fast, either cut in half or double, right? And that's just based on your risk preference. But regardless, has to be oversold USA over 2 billion to find those good quality oversold stocks. So that's the video, guys. Thank you for watching, and if you enjoyed, please click like on this video. Subscribe for videos every Monday, Wednesday, Friday. Thanks again.